Morning, market chameleons, and happy St. Patrick's Day to everyone. Morning, Dima.
Good morning, Will. How are you?
Good. Everyone's Irish today, D, including you and I.
St. Patrick. Yep.
All right, let's get started with the disclaimer. What do you think?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions, provide you with guidance. There's the disclaimer.
Excellent. What are you seeing this morning?
Let's take a look at pre-market report. Then I think we'll do, maybe go to the bullish bearish ideas, because we haven't done those in a while, unless you have questions about anything. And I know, we've been pushing out some fundamentals recently. If you do get questions regarding those, just let me know. I'm going to try to address those during the show.
Excellent.
Okay. So this is the pre-market report. We got stocks trading in the pre-market. We got most active stocks, biggest percentage gainers, biggest percentage decliners. Let's take a look first what's going on in the higher market cap stocks. So I'm going to use this filter, stocks with $20 billion market cap or higher. So we see here 7 made the percentage gainers list, 67 on the percentage decliners list. So from that perspective, looks like a more bearish bias at the open. Couple of them that are making the top of the list: TAK, CRWD. That looks like that's moving on earnings, up 2.3%. And some of these other ones don't really stick out. Not a lot of volume trading in them, but up a couple percentage points. 67 though on the percentage decliners list. So that's, doesn't fare well for the opening. On the unfiltered report, got a couple stocks here jumping in the lower cap market stocks. Here we got ZCMD up 80%, trading 15 million shares, market cap 45 million. I'm going to hover over this. Looks like there is some news out there. I'll let you go read that news. It looks like based on the contract that they're signing. So up 80% in the pre-market hours. IMTZ up 30.3%. That's trading 1.1 million shares in the pre-market hours. I'm going to just hover over here. Looks that's healthcare stock. So they released some data there that looks positive, up 30%. And this stock's market cap 731 million. Next one down, CVU up 25% on trading 1 million shares in the pre-market hours. This market cap 58.3 million. I'm just going to hover over it. Looks like there's also some news with a deal, potentially Lockheed Martin. That's reacting up 25%. Other than that, I'm seeing some lower volume, below 1 million and going down the list. So those are the only ones really that stuck out. Let me know if you have any questions in any of these, Will. But to save time, I'm just going to move on to like bullish bearish ideas, maybe also hit on some earnings, upcoming earnings.
Great.
All right. So I'm going to go here to the home page, and we're going to take a look at some of these tabs here. So this is, if you've been doing some searches, then it'll jump to this custom search here, and it'll show your recently viewed stocks. So this way you could kind of scroll through them, see if there are any trade idea cards popping up here. And this will default to top 3 trade ideas by edge, but you could change it to look, bull call spread, bear call spread, any one of these all the way out to any, and then it'll show you all the trade ideas this way. Let me just stick by top 3 by theoretical edge. I'm going to go here. If you do have all these other tabs here that you could go to. So we've got the most active stocks. here, and these are the most active options. So if you want to look through ideas which stocks are trading a lot of option volume, you can scroll through here by tabbing, and it'll show you some of these trade cards. Again, this is going to be defaulted top 3 by edge, but you could go see, is there bull call spread, bear spread, or any, and it'll show you all the trade cards. Now these cards, they're being generated from our screeners using our presets. But you could go to the screeners and screen out and use your own filters. These are just some ideas being generated as starting points using the presets that we set and filtered out. Coming from the most active, let's just take a look at, bullish and bearish opportunities. So these are bullish opportunities. And these are basing it basically on some technical trends. Okay, so it's kind of, because with options, you're looking at more of short-term plays. So it's looking for some short-term technical momentums, technical trends, and then it's up to you to kind of go and do some further research. You could look at, combine that with fundamentals, news, and so forth. So this is kind of a starting point. So pick out, we see at the top of the list, you got Microsoft, Google, Visa, Bank of America. So you can see here, Microsoft, right now, the stock's been on an uptrend. So that's why when that was detected, then it looks for bullish opportunities in options with a theoretical edge. So over here, we found a bull call spread. This is looking at the April 16th 240 call, buying the 240 call, selling the 245 call. Right now, that spread as of yesterday's close was $2.10. We think theoretically it's worth $3.28 based on historical stock behavior. That's a 56% theoretical edge with a historical probability of success 65%. Here's a bull put spread found in Microsoft. So that's looking at that's basically the reverse of this one, buying the 240 put and selling the 245 put, April 16th expiration for $2.70. We think it's worth theoretically $1.73 based on historical stock behavior. That's a 42.4% theoretical edge, and historical probability of success 65%. Last one, it found long call. That's looking at the April 16 240 call. That closed at $5.80. We think theoretically it's worth $7.92. That's theoretical edge 36.6%. Historical probability of success 48%. And if you click on this, we could here, let's use this one as an example. I'll use this first one as an example. Microsoft. I'm going to hit the options chain here. It's going to take me to the options chain, populate the 2 legs of that spread for us here below. So this is the options chain. Went to April 16th expiration, buying the April 16th 240 call, 580. So you can see here, the option was 570, 580. So theoretically, if you bought it on the offer, 580, then sold the 245 call, 370. Here, I'm going to load that strategy. So we could see here we're paying $2.10, right? 580, selling at 370. We're paying $2.10. Midpoint is $2. So keep that in mind. You always want to get closer. The closer you get to the midpoint, the better, because the further you go away from the midpoint, the more you're paying a fee to execute that trade. So that's important. Keep the spread. The spread is important, how wide the bid-ask spread is, and the midpoint, and how far away you're getting an execution from that midpoint. So this is what the payout diagram looks like at expiration. If the stock closes around here, then whatever you paid, $2.10, you would lose. So you really need that. You need that stock to go up from here. If it goes down, that's your max loss, what you paid for it, $2.10. If it goes up and it goes above that, your right 245 strike, that's where you're going to hit your max gain. That's where you make $2.90. So you're risking $2.10 to make $2.90, over 100% return if this pans out, goes up above 245. So let me just take a look at this theoretical value. So if we took the last 4 years of data and said, well, what was the average end value of this spread? If you did the same similar spread over and over and over again, that's $3.23. That's using 4 years of data. You know, we could take a look at 2 years of data, $2.90. So you could change that over here. Let's keep it at 4 for now. So average end value, $3.23. You buy $2.10. That's a theoretical edge of $1.13. In other words, theoretically, historically, if you did this spread over and over and over and over again for $2.10, and on average, it was worth $3.23 at expiration, your average gain $1.13. Historically, how often would this have been profitable if you did it at $2.10? In other words, how many times did the end value, you know, at expiration end up being more than $2.10? That was 65.5% of the time in the last 4 years. All right, so that's looking at the data. There's other things within this data that, you know, that's being taken into consideration. It's taken out earnings events because there's no earnings coming up between now and April 16th. So it's going to exclude earnings. It's doing that for you. It's also narrowing down the data based on where the implied volatility range is. So I have it set to dynamic. If you wanted to see all the observations, no matter where the implied vol was, you could just do all results like this and actually ended up being the same. Okay, so that's how you could analyze it further. And if you want to take a look at it, more recent data, let's do the last year. So in the last year, there's only 7 observations because it's 22 days. But out of those 7 observations, 57% win rate, theoretical edge 59 cents. So hopefully that makes sense. So that's in Microsoft. Let's take another look at Microsoft. Where do we think, you know, is, so here are a couple other indicators up here. So this is a seasonality. So here we see that the hold period is from now till April 16th. Historically, between this period, March 16th and April 16th, this is as of yesterday's close, Microsoft was up 83% of the time in the last 10 years for an average gain of 6.1%. We also know that this is a 22-day hold period, right? From now to expiration, 22 days, 22 trading days. Historically, over 22-day hold period, right? Because this is consideration. The longer you go, the more, you know, other things kick in like inflation, order flow from pension funds and so forth. So over a 22-day hold period, Microsoft historically is up 84.4% of the time for an average gain of 3.1%. Right now, technically, we're in an uptrend. Basically, all the moving averages are crossed in a bullish manner. Let's take a look at the fundamentals while we're on Microsoft. So I'm going to take a look at the fair value just to see if it's around fair value. So if we took Microsoft right now, market price 237.71, that's where it closed. If we used historical multiples, you know, if we said we're based on the 3-year average PE ratio, this is where Microsoft would be worth. If we use the 3-year average price to sales ratio, which is basically market cap divided by its revenue, this is the average. This is what it would, if we use that, this is what the implied value is. Same thing, price to book and operating income. Then if we compared that to say, well, how does that premium compared to the market. So if we looked at Microsoft, historically the P ratio, well, right now the P ratio is at a 7% discount to SPY. Historically, it was at a 22% premium to SPY. So if we use that as our benchmark, this is the implied value of Microsoft. And if we did that with all their multiples compared to SPY and took the average of all these, this would be the implied value. So if we compare implied value versus market price using historical multiples, looks like maybe a little bit, around fair value, 6.8% above it. So not huge premium above it, but like right around there, maybe a little bit higher. If we use forward-looking estimates, right? So that one was looking at historicals, but what if we used forward-looking estimates based on Microsoft's operating margins over here, the estimated revenue growth, and the volatility. So right here, this is Microsoft's operating margin. So we see the last profit margins was 37% of revenue. So operating margins, again, that's profits coming from their core business, right? So just their core business. It's not including like other, investments or sales of stuff. It's just profits coming from their core business. Those operating margins, 37%, SPY 11.5%. So we're comparing them here. Revenue growth, we see Microsoft 3-year average revenue growth, 17%, SPY 4.3%. This is the volatility, Microsoft 31.7, historical volatility for SPY 23.1. So if we just use these numbers, and we could change them around, but if we just use these numbers and said, if these numbers persist in the next 5 years, what's better? So here's the results. So here's SPY, here's Microsoft, here's SPY's market cap, here's Microsoft's market cap. This is not the market cap of SPY, but all the holdings in SPY, right? We're just looking at the stocks in the SPY as the benchmark index. This is the revenue of all the holdings in the S&P 500. This is Microsoft's revenue. So if we assume the next 5 years, right, that SPY revenue growth is 4.3% per year, every year it increases 4.3%, their operating margin is 11.5%. And if Microsoft, we assume that its revenue will grow 17.7% year over year, and their operating profit is 37%, then this is the total operating profits in SPY, S&P 500, total operating profits in Microsoft. If this is our starting market cap in SPY, starting market cap in Microsoft. So we see 21.6% return in SPY, 26% return in 5 years in Microsoft. So as you can see here, Microsoft would beat out using those forward estimates. So where would Microsoft be valued if it was in line with the rest of the market, right? So obviously, if it's making more money to equal the same return, we could pay more for the stock, more market cap, right? So if you're, for example, if you buy a house for $100,000 and you have $10,000 in rent, that's a 10% return. If I pay $200,000 for the same house and still make $10,000 in rent, that's only a 5% return. So to make these equal, that means Microsoft, you could pay as high as $285.76. So that's a 16.8% discount.
Let me ask you this. Why do people buy rental properties that pay less than a 5% return?
Why? Well, and that's something to decide, because that's what happens with growth stocks, right? If you think, well, that the potential to increase rents or appreciation in this property is high and it will beat out the benchmarks in the next whatever 3, 4, 5 years, you might be willing to pay that premium, right? So that's where you have to kind of go in there and decide, am I willing to do that? And that's kind of like the argument right now with like Tesla and some of these other companies. They're like, well, you shouldn't look at that because there's a much bigger potential that you have to consider, right? Like there's a bigger market out there that they're going to tap into with new products or whatever, that if you plug that in, and that's why you have this calculator, because you could change these assumptions, right? I could say, well, Microsoft's got these new products that are going to increase its margins. So its margins are going to be 45%. And yeah, they did grow at 17%, but now they're tapping into this new market that's going to make their revenue actually grow by 25%. So if I recalculate that and I think, how do I compare it? Then boom, you see, all of a sudden its implied value is much higher. So this is forward-looking expectations where you want to try to say, I'm going to analyze it. Let's say I'll use Tesla as an example because it just keeps on. Tesla is getting into the energy space that's going to help the utility industries manage their, energy better. Well, how big is that industry? How many of those utility companies are potential customers? What are the margins? And if you think it's going to take, 5 years, and what would be the average growth rate? So start plugging that into your models, then you could kind of get, maybe that growth is undervalued, right? So that's how you would compare it. Maybe people are not fully realizing the potential in that stock. Does that make sense?
Yeah, it makes a lot of sense.
Yeah. So that's where, you could start playing around with the numbers. The defaults are for, as a default, it just goes to the historicals and say, as a default, if the historicals persist, how do they match up? Then it's up to you to kind of go in there, read those earnings press releases to see what the management is saying, what they have going on as far as like, products in their pipeline, what their estimates are going forward, and then you could start changing these numbers around. So we went over, a bullish idea, kind of taking a look at, we looked at it from a perspective, well, we just did the fundamentals. We also took a look at, some of the statistical analysis based on seasonality, average drift, and the technicals. And then we found opportunity in a call spread that also looked like it had edge, right? So what we're doing here is trying to construct a strategy which is, do we feel like we have a better, our odds better, than or worse? Are we improving our odds of success, right? Do we have a theoretical edge? That's what we're looking for, going through steps and saying that, does this look like a good deal or not a good deal? How risky is it? How likely am I to win or not win? Because we don't actually know the outcome. We're just trying to handicap it. Does that make sense to people? Let me know if you have questions.
That makes a lot of sense, and everyone's pretty happy you're going through this step by step.
Okay, so
I did have a question. Are you all right taking a question off topic?
Yeah, definitely.
It was from our favorite chameleon in Chicago, who, by the way, says the river still runs green in Chicago on St. Patrick's Day all day.
Oh, really?
Yeah.
That's awesome how they do that.
Yeah, it's amazing. He was asking about Fed announcements. Is there somewhere on the site where A, could Fed announcements be looked at or tracked, and B, is there any research on how the market may react to
so yes, there is a tool here. If you go to the tools here and events, I think one of them is the FOMC meetings, right? So here's the FOMC meeting, and I'm going to take a look at the report here. So here's how you have before the event, day of, and look, not all stocks are that sensitive to the, FOMC meeting, but this is basically how the historical last 12 FOMC meetings, how the stock reacted. So
So this is so you do break, the Chameleon does break it down to the stock, but you could also, like, if we wanted to look at SPY, you would just put SPY in the symbol.
you could put SPY.
I think that's what he wanted to see.
Yeah, you could put in SPY over here, and we'll go to the FOMC meeting. Here, FOMC meetings. I'm going to reload it. So we could see here how the day of the meeting. So this is how it reacted in the last 12. So 58% of the time, the stock on the day finished positive. 42% it finished in a negative. Average gain 0.3%. So it looks like, at least the gains on average exceeded the downs. So here we have the max up move, max down move. So far the gains exceeded the down moves. Looks like it tended to weaken a little bit after the FOMC meeting. So if we're coming out of the meeting, it tended to be a little bit weaker, like 50-50, but it looks like it did lose a little bit of ground. But again, also pay attention to what they're saying, right? Because whatever they're saying now could be different from what they're saying before, and if they're saying something like, we're afraid of inflation, the bonds are going crazy, whatever they're saying, you have to pay attention, because that's just as important, right? What's the message? Sometimes the message is very subtle, sometimes it could change. So pay attention to that. But this is how it reacted in the last 12 quarters, not quarters, 12 announcements. I'm just looking at the average moves, so you could see here the next day on average about 1%. So not a huge amount of volatility, but you could see here, like, look at the down moves, on the way down were much greater than the ones on the way up. It looks like coming out of the meeting, not the day up, coming out of the meeting. Okay.
Very helpful
with that. Yep. So that's on the FOMC. We got to do one today from the bullish side in Microsoft. I don't have time for another one, but what we could do, maybe take a look at some, some bearish, that are popping up, Alibaba, PDDD, Costco. So we could look at, here's a popular one, Plug. Plug popped in there. So that's reversing, that's been up. Now it's like in a bearish crossover. Just trying to look at some other ones. These are the bonds, TLT. That's the 20-year treasury. So that's, you could see here, look at that, 136.31 high, 172.25. So that's been in a bearish, trading in a bearish manner. Again, that's an ETF, so that's not a stock. You would look at it from different, analysis. Just wanted to show couple ways to look through. I didn't go to look at other things such as news that could be impacting it. So, on top of that, you probably want to see the most recent news. If they have any upcoming events, you maybe take a look at their last earnings press release, see if the management's also communicating anything. Again, you're just trying to put the pieces together to say, do I think I'm more likely, to be successful in this or not? And hopefully that example was helpful.
Yeah, I think everyone is appreciative for that, D. Great job, as always, my friend.
All right. Well, everyone stay safe. Have a great trading day. We'll go over some more examples tomorrow. Hope to see you guys tomorrow morning. Thanks for joining.
Great job.